are you doing, John?
I'm well, Gilbert. Good to see you.
Good to see you behind some nice decorations from your office there. And maybe let's go for a few of the sort of agenda here, quick few things. So we will ask you about the US dollar situation, what's going on there, and then talk about maybe the China-US relations, how it's affecting the world's economy. And then we'll talk about gold. And maybe if we have time, touch upon something about silver. How does that sound?
Sounds good.
Sounds good. So let's go through the sort of first icebreaker. People might be interested. You always I call it gold bug. So do you own any sort of physical gold yourself, like gold coins, bullion, whatever?
Yeah, I've been collecting gold since it was $35 an ounce.
Wow.
I can recall even being traveling to China and Hong Kong and seeing friends there, and I'd be given gifts of what they called slippers. There were gold in tails, taels.
Yeah.
They look like slippers, and I collected those. They different, and gold, as you know, the Chinese have had a historic relationship with gold. In fact, at one time, China was once on the silver standard, so their currency was tied to silver. So it goes back a long way.
Good to hear. So let's talk about first thing first. In the recent report, some of the problems that U.S. Government is facing, like Joe Biden's facing back home. This is quite numerous issues that he has to face back home now. So can you tell us more about what sort of the problems like that, issues or other problems that he's facing?
Well, I think that when you invited me, the major point was that the world seems to be coming to an end and it's got a lot of problems. And in fact, I felt that a lot of the chickens were coming home to roost. And thus I wrote my report. And you start off with first inflation. I mean, inflation in last year and for a good part of this year is a problem for the markets. Interest rates went skyrocketing up. People's mortgages became problematic. Everything became expensive. Wages started going up. Interest rates went up to 22-year highs. That crushed earlier in the year three banks, of course, and the biggest bank that could not fail, Credit Suisse, actually failed. So inflation was a problem when 20 years ago, for the last 20 years, it hasn't been a problem. So we have to ask, why is inflation a problem today? And again, I go back and we look at the world's economy since 2008, the central banks have tried to keep interest rates down. They brought interest rates down from double-digit levels to, in fact, almost near zero. And for a time, the stock market enjoyed that because it was free market. For a time, housing, everybody could buy a house because money was free. You didn't have to pay a big mortgage. You could buy cars. Money was free. Well, eventually this catches up because inflation is too much money chasing too few goods. And we had too much money chasing too few houses. We had too much money chasing too few cars. We had too much money chasing too few stocks. So naturally, there will come a point in time when inflation started going up. And the catalyst, of course, was the Ukraine war was a big factor because that stretched supply chains with the realization for a lot of people that we did not have that much in supply chain. And so prices started moving up. And so inflation deflated the stock market, has deflated the property boom. Now it's problematic because when you virtually had a 1% or 2% mortgage, you can have 5 to 7% mortgage. So it's a problem for the stock market. It's a problem for people at home, and it's a problem for everyone. And that is one of the chickens that came home to roost. The other chicken that came home to roost is geopolitical world. When Russia invaded Ukraine, It stretched the supply chains. We realized we did not have enough guns. We did not have enough tanks. We did not have enough energy. The world was disrupted. But that wasn't the only war. Today, now we have the Hamas-Israeli war. And there's a potential of that spreading. There's the possibility, for example, of it spreading in the Middle East. And we have had problems in the Middle East before. We have had previous oil embargoes. And when the oil embargoes, oil can go to $100 a barrel, can go to $125 a barrel. That's problematic for the economy, particularly when we already have inflation, notwithstanding the fact that this week inflation has bumped down a bit, but we still have inflation, and that's a problem. So while the market is celebrating this week the better inflation number, what is really happening is that the third factor that's coming home to roost is that under Biden, last year, he brought in the Inflation Reduction Act, which was misnamed. It had nothing to do with bringing down inflation. It had everything to do with greening the economy and giving out money, $400 billion in subsidies, so that you could make battery plants in the United States, conveniently in the swing states that with the upcoming election, you could incentivize wind power off of the coast of New Jersey, and you could kickstart a greening of the economy. Well, that's great, except that $400 billion also sparked a war where Canada, we gave $10 billion for a plant that was originally going to cost $1.5 billion to a car company so that they could build batteries in Ontario. And what's ridiculous about that is that we're going to subsidize these people to build batteries, and we're going to ship the batteries to be assembled in cars in the United States, Korea, or elsewhere. Where is the jobs? And so Americans have gone on and spent a lot of money on greening the economy. They spent a lot of money fighting the pandemic, not in giving out vaccines, but in giving out subsidies. And in fact, they spent almost 20% of their GDP in giving out handouts to businesses, handouts to students, handouts to people in order to protect them from COVID. But of course, that didn't work because we had 1 million lives, American lives lost and that. But the markets are now paying the hangover. Because when you print that much money, history shows that when you print to help society, and at the same time you print to fight a war, what is actually happened in the late 60s and 70s is when Lyndon Johnson fought the war in Vietnam. At the same time, he tried to introduce the Great Society, and that was giving tax cuts and subsidies to people. And you can't do both, because that resulted in the inflation of the 70s, which ended up being double digit, and thus interest rates had to go to double digit. So we've seen what happens when governments decide to give guns and butter at the same time. It does not work. It ends up in double digit inflation, and it ends up in interest rates going up. So my sense is that the chickens are coming home to roost again when Mr. Biden is trying to green the economy, as well as fight two wars, and a war at home, a cultural war. The cultural war is, part of it is wokeness, part of it is that the Americans are very divided right now, and you have the extreme right, you have the extreme left, no middle. This is costing the American economy a lot of money. So what we have here is those chickens have come home to roost, and it creates tremendous uncertainty, particularly when next year we have an election in the United States. And the election, we have a repeat, Biden versus Trump. And unfortunately, Trump is leading in 5 of the most important swing states. And so what we could have again is the polarization of the American society yet again. And when you look at what Mr. Trump could do, he was the one that sparked the trade wars. He was the one that sparked the polarization. And he was the one that hardened the stance against China. Now, China, and I'll spend just a little bit about China. China has grown, as we know, in the last 50 years, 40 years, into the second greatest superpower in the world. The Americans, no question about it, they didn't like the competition. Nobody likes competition, but for the Americans, the Chinese economy, they benefited. They benefited from the $1.3 billion market. Businesses went over. Our economies became integrated with China's. We both benefited. But under Trump, there was a hardening and there was a realization that part of it is for political reasons. There was a realization that, in fact, China was not a competitor, but an adversary. And that has resulted in the demonization, I call, of everything Chinese. Now, for the Chinese to accept that, it's a problem. When Pelosi went to Taiwan, there's no question that set off the alarm bells in China. So we have now had really the Chinese and the American relationships, notwithstanding that both leaders are meeting today for a meeting on the sidelines at the APEC conference in San Francisco, that the conditions have never been worse between the two countries. And yes, the rhetoric will be cooled a bit, but the fact remains is there still are sanctions, there still are trade barriers, there still are embargoes against technology. There's going to be in the Capitol Hill, there are moves to limit Chinese investments and everything from real estate to, and in turn, the Chinese have reacted too. So this does not present a very good climate. But the product of that, and this is why I say the chickens are going to come home to roost with the differences between the two economies, is because America depends, in greening the economy, depends on the critical minerals provided by China. And China, because for 10 years ago, you can recall when you went to China, they had electric cars way before we had electric cars over here. They had 5G before we had 5G. The reality is that for the China, they have a lock on the critical minerals. They have 100% of the graphite. They have 60% of the cobalt market. They have a bulk of the lithium. And because they have the processing capability, they do not have enough lithium reserves. For the last 5 years, they have gone around the world and purchased those reserves. Latin America, South America, Zimbabwe, they have gone around the world, even in Canada, buying enough lithium. Only now are we in the West realizing that we've hollowed out in Canada our mining industry, but we don't have enough of the critical minerals needed for the wind powers, for the batteries, for the electric grid that we have put in place. So the problem, frankly, is that we not only don't have enough minerals, we don't have the processing capability. Because in China, they can process those, not only find those minerals, but they can also process those minerals so they can use in the batteries. America only has one lithium plant, and they have to send that product to China to have it processed. Now, they're going to have to spend money for processing in North America, but yet to this day, there still is not that processing capability. So here we are greening the economy, and we are becoming more dependent on China. But the most important dependency on China is the Americans are running the biggest deficits in the world at on average about 8% of GDP. Their deficits for the last 50 years was around 40 years was around 3%. So they've almost tripled their percentage on GDP. The Americans need outside money to finance those deficits. And the realization is that China at one time was once the big creditor. China has the largest reserves, cash reserves in the world. America is the biggest debtor in the world. So America is dependent upon outsiders to finance their lifestyle, their economy. So here, the Americans are becoming dependent then on not only for critical minerals, but also for financing. And that's problematic. So what we are looking forward to, and what I expect in this very uncertain world, as these chickens come home to roost, is you have to look as what should an investor do? And that's the big question.
John, let's just talk a bit about the US dollar, because you were talking about how US been, of course, printing all the money, continue on to give subsidies. So how come, I have a good question for you, how come we've been seeing all these years waiting for the US dollar to go weaker and weaker, but how come it's still so strong these days? So what's happening there?
Well, there's two reasons, Gilbert. One is that the interest rates have gone up, and so that has attracted everybody. That's been attractive. However, now money supply, which has gone up, is now being constrained, and that's as a result of the higher rates. The higher rates have attracted outside money. But the outside money is here on a 30-day basis, 60-day basis. If you look at gold, for example, gold, I believe, is a universal currency. Gold in yen is up 20%. Gold in rubles is up 80%. So we live in a dollar world, so we see a strong dollar and benefit. My expectation is that the dollar, with all the problems, will go down. It's been down in 75. It was brought down in the 85 Paris Agreement. And so currencies go strong, and then they also go weak. So the weakness in the dollar will be a major move for gold in dollar terms.
Great. And we're also seeing the growing trend, not sure you agree with me, is that the countries, the power of the world try to, we call ditch the US dollar in terms of trade. For example, Brazil is signing agreement with China to do trade with their own currencies. Are you seeing that going to become more and more popular choices in moving forward and affecting US sort of dominance in that currency?
That's a very good point, Gilbert. What's happening is that we're seeing this in the wars, that when Russia invaded Ukraine, we had the sanctions, and the Americans weaponized the dollar. And the Russians, they had to sell their oil to somebody, and the Chinese ended up saying, okay, we'll buy your oil at a bigger discount. And of course, that's helping the Chinese economy, and it's helping the Russians. And in fact, the Russian revenues have doubled rather than even with the sanctions. But most important is that the Russians also had to clear the purchases with the renminbi or the yuan, for example. So the Chinese have a outside messaging service system that, in fact, it's very similar to the West, but others are using it. The Chinese also did a deal with the Middle East on exchange for oil for yuan. So now you have the development of the petro yuan, and instead of petrodollars as it was in the 20 years ago, now we're using a petro yuan. What I'm saying is that there are more and more countries using their respective currencies. And that means fewer dollars. Fewer dollars mean less pressure on the dollar, and the dollar will go down.
Great. And just also in response to your earlier mentioning about China, how they have dominance over some materials and the processing facilities. So what do you think of the end game would be because they are going back and forth? The US, they're banning certain things, stop selling chips to China. China is in response in restricting export for graphite and other materials. Will they keep going back and forth? Will China ultimately press that button to say, hey, okay, I gotta stop this and see how you respond? What do you think of the end game will look like?
Well, it's hard to say. I mean, we are seeing now a moderation of tone, and that's needed. But there is no question that both countries look upon each other as adversaries. I believe that for the last 50 years, the Americans were dominant. Now, what the realization is that we have a multipolar, multi-currency type of, in Asia, China will be the leader. There will be Latin America, South America, there will maybe Brazil, there will be that currency, that'll be currency block. In Europe, there will be the Euro bloc. There will be alternatives. There will not be a dominant power. It'll be a multi-power. Commercial arrangements will be along the same lines too. China has unveiled the belt and system, Belt and Road system, and they spent $1.4 trillion scattered around, and they solidified the development financing. So there's a world out there that is not just dollar related anymore. So my sense is that we are going to have to get along from a commercial standpoint. We're going to continue to trade. People are going to need food. They're going to need energy. So the problem is that for America, from a political standpoint, the polarization, I can't see a resolution on the polarization. They're just two extremes, and I just can't see them getting together.
Indeed. So we're a few minutes left. Let's talk about gold. Is it safe to say that we are not going to go back to the level we was 20 years ago, or even in 2009 when we were at thousands US dollars level anymore in the future?
Well, of interest is that in this multipolar world, we're going to need a common currency. And there is talk now of China has been buying every month for the last year gold, and they are now the fifth largest holder, around 2,200 tons. Americans have about 8,000 tons. I believe that eventually, to get us out of this problem, because fiat currencies you can print money any day. But the trouble is what is the purchasing power, the value? History shows that you have to have a standard, a gold, maybe a gold standard, maybe a silver standard. There's got to be some acceptance. If you have a gold standard, if the Chinese made a renminbi backed by gold, there's no question that would be the stronger currency, and thus that would help it. So my expectation is gold has a role, and it will be a monetary role. It's a hedge against inflation, and particularly in this geopolitical world, it will be a hedge against geopolitical uncertainties in the world.
Great to have you with us, John, here today. The time really flies. We ran out of time, and always good to have your insights about the world's going on. We certainly agree that we're in a lot of uncertainties around the world now. So hope more peace, and of course we'll believe in gold ourselves, and hope the investors can enjoy a long global one in the future.
谢谢你。
Thank you for your time.